My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Let me ask you this. Are you in the single family home space or in flips or in even multifamily residential type properties, and you've been looking at getting into industrial properties, into the industrial asset class, into that kind of commercial space? Well, if so, pay close attention, because today's special guest, zooming in from just down the Rockies from us in beautiful Vail, Colorado, we've got Danny Newberry from Vail Commercial Group, and that's what they focus on. They focus on commercial properties and industrial properties. And Danny was telling me before we jumped on the recording that these days they're doing a lot of joint ventures with newer industrial investors and getting them into industrial properties. So Danny, welcome to the show.
Hey, Dave. Thanks for having me. I definitely appreciate it and happy to be on.
So Danny, give us a little 30,000 foot perspective. What do you guys invest in? What does the portfolio look like as of mid 2025?
Yeah, absolutely. So just a little background. I did start in small multifamily and got up to a couple hundred units. And ultimately I had a mentor that he was also an investor and only owned triple net assets in his personal portfolio. And I asked him one day, I said, why are you, investing with me in multifamily, but you don't own any multifamily yourself? And he goes, oh, I don't want to work that hard. I go, what do you mean? I go, I got to know what you're talking about here. He goes, oh, no. I only buy these true triple net lease deals, where essentially on the tenant side, they pay for everything from, your CAM, so your common area maintenance, your taxes, your insurance. They don't call you when the toilet backs up. And I said, wow, I gotta figure this out. This sounds very interesting. So back in, I want to say 2013, 2014, I started jumping into shopping centers, industrial buildings, and office buildings. And to be completely honest, I think I've only bought one multifamily project since then because I was kind of addicted. So
that's cool. So let's zoom out for a second, and then we'll get into what the portfolio looks like today. But so you had a background in multifamily, residential multifamily. Your mentor was all in on triple net lease, industrial and commercial properties. You decided to give it a try. You like it. You got hooked, but it can't all be sunshine and flowers. And you're the perfect guy to kind of compare and contrast. So what would you say are the pros of multifamily versus commercial? And then what are the big pros of commercial versus multifamily?
Yeah, absolutely. So multifamily is a commodity, right? There's always a line of tenants out the door. When you have vacancy in office, retail, industrial, it takes a little work to find a tenant and to find the right tenant, right? So you could be sitting on a vacancy a lot longer than, a vacant apartment complex, right? So that's probably the biggest thing. But what I really enjoy is that once you do have a tenant and you lock in a long-term lease, a typical lease term is typically 3, 5, 7, 10 years long. And, you're doing a background check, you're looking into, the P&Ls of any business. A lot of times they're even startup businesses if they're taking a small spot, and, that's just part of the risk factor. But depending on your location, depending on the tenant, depending on how much, their funds that they have, we'll look at all those different components. And at the end of the day, we make an educated decision. But I love the fact that once you do it, you don't have to worry about it for a long, long, long time. And typically they'll just keep renewing with you. So it becomes a little bit more passive, I guess, from that standpoint, and a lot more
like your mentor said. Your mentor said back in the day, right?
Yeah, and it's a lot more scalable if you want to keep a small team. If you want to grow multifamily, you have to keep employing, every time. I remember we bought a 138 unit and, I had, I don't know, maybe 10 employees on site, right? Between property management, your maintenance, all these different aspects, right? And so if you go and buy a couple thousand units, that's probably a couple hundred employees. So it just depends on, do you want a big company? Do you want to be managing, this many people? versus I know guys that have, a $250 million portfolio with literally two people on payroll. So, it just depends on what you want.
A simpler business model. Okay, very cool. Thanks for explaining that. So we're middle of 2025 right now as we're recording this, Danny. What does your portfolio look like these days? Like, I don't know, a lot of guys go by assets under management. I kind of like to do that, plus take a look at how many different properties do you have. So what does a portfolio look like?
Yeah, so right now we have about 130 million in assets under management. We've got probably 30 million under contract right now, so we'll see, if that closes or not. But we're constantly selling. We just sold a few. So we're buying, selling, we're holding some. Like I look at it like two buckets. One bucket is, we're fixing it up, filling it up, and flipping out of it, and that kind of keeps the lights on. We're generating cash. We're able to reinvest those cash into new deals. And then we have the deals that we really, really love, and we're refinancing into long-term non-recourse
Okay.
debt typically. And the primary asset class is retail and industrial. So, and specifically small bay. So, looking at retail, we're in neighborhood shopping centers. Typically, love the 1,000 to 5,000 square foot bays, and then in industrial, 1 to 5,000, sometimes up to 10,000 square feet, multi-tenant industrial. So that's our primary focus. We do some large box stuff, but that's not the typical deal.
Okay. So Danny, you mentioned something interesting there that you kind of have a buy, fix, lease up, and sell model. So almost a flip, let's say an industrial flip, and then you've got the
Mm-hmm.
long-term buy and hold. Is it one of the different classes that you tend to flip more than the other, or is it just kind of deal specific? What?
It's very deal specific. It's depending on how many assets do I have in this market. Like, just to give you a quick overview, I've done deals in 15 states. I'd say the primary majority of that portfolio is in the Southwest and Rocky Mountain region. So if we get something in Colorado, Vegas, Arizona, Utah, probably would rather hold it just because I'm so close, right? Our offices are close. We
Mhm.
have boots on the ground. But if it's out in, Wisconsin or, Georgia or something like, well, and it's a great deal, yeah, we'll do it. But, long term, I'm not there to put my eyes on it on a regular
Yeah,
basis. And it becomes a little bit more management intensive, right? So that one we might look at flipping out of.
got it, got it, got it. And probably no exact formula for this, but if you could wave the realistic magic wand, what percentage of deals would you like to keep versus flip?
Yep. So we are kind of, when we look at it over the last decade, we, out of every three deals, we keep one. We sell two,
Oh,
keep one. So that's kind of the typical model right now.
okay.
We've done about 60 commercial assets. 35, maybe 40 of them full circle. 35 full circle. Yeah.
Hmm. So how, just out of curiosity, every deal is different, obviously, but what's the typical time frame to buy one of these kind of properties, get it fixed up, get it leased out, get it,
Mhm.
sexy and ready for sale and sell it? What does that look like time wise usually?
Yeah, you're not going to believe me on this because I don't know what it is. It must be just like some of the tricks of the trades that we've learned over time. But our goal is to always do it in less than 24 months.
Wow.
In some of these larger assets, it could take some people 5 to 10 years to do what we can typically try and do in 12 to 24 months. Some projects take longer. Not everything always goes as planned, of course. But when we look back and we actually look at our timeframes, it's typically been ready to go back to market or to refinance in less than 24 months.
So maybe the best way to kind of illustrate that would be pulling out of your memory bank like your favorite deal like this ever. Maybe walk us through that one and how it kind of worked out. So what was it? Where was it? What did it look like
Yeah,
getting into it? What did you do to it? Who did you, just paint us, tell us the story if you would, Danny.
absolutely. I've got one that is right down the road from where I'm at now, over in Denver. It was a flex industrial building that was on the 10X auction platform. And the main tenant, who occupied 50% of the property, was about 40,000 square feet. was Eaton Corporation. So national, multi-billion dollar corporation. They had been there for a while, but their lease was coming up in 12 months.
Mm.
And if they left, obviously, yeah, there's a lot of value with them leaving, right? That you're going to
That
absorb.
walks out the
And
door. Yeah.
yeah, exactly. And on these commercial deals, it's all about the lease, right? That's what really creates the value in these properties. So if they left, we knew that the value was going to be X, and if they stayed, and we could get them to a market rate rent because they were below market, there was a lot of value to be had. So what we did before auction is we actually reached out to a few connections that we knew that worked with Eaton, and they were able to give us insight that this was a great location, and actually that they were already in discussions of renewing at that site. And so we kind of had a little bit of some insight that, hey, they're doing great here and they'd like to stay. So the probability is, hey, they're going to stick around, but we still got to buy it right in case they don't and it doesn't work out. So we ended up winning the auction for 3.6 million. And with an auction, you have to put 10% down immediately upon.
So sorry to interrupt, but why was this thing on the auction block in the first place?
It was an REO. It was a bank-owned asset. And essentially it was a portfolio of deals that went bad with the previous owner, and so it wasn't this specific asset that went back to the bank. It was a conglomerate.
He lost
of
the
several.
whole portfolio to the bank, basically.
Correct.
The guy went under.
Yep. Yeah. And so they're like, hey, this is the fastest way to get rid of it.
Got it.
So we bought it for 3.6. Immediately went to Eaton and said, hey, look, we'd love for you guys to stay. We'd love for you to renew. What can we do? Can we upgrade your space? Can we, give you some abated rent? What would you guys like to stick around and sign a lease, a year in advance before your actual term is up? And they said, if you give us some new carpet, because everyone's complaining about this old carpet, and if you could just do carpet, which literally was $30,000, maybe $40,000 to recarpet the whole place, and then a few small maintenance items. They're like, well, we'll do a 5-year renewal, and I was like, great, let's make it happen. So we spent less than 50 grand. We got the renewal done, and we went back to market on month 9 because we wanted to get past the year and a day. And we knew he'd be out there for probably 60 days on the market, receiving offers. And we ultimately sold it on month 13 for 7.3 million. So it was a quick, 13-month deal where, we made 3.5 million in profit, just by, evaluating it right, buying it right, renewing the tenant at market terms. And that was it.
I can see why that's your favorite deal for sure. No, that is a beauty. Awesome. Now, we were chatting a little bit before we started the recording that these days you guys are doing joint venture deals with a lot of newer investors in this space. So maybe tell us a little bit about that. How does that typically work?
Yeah, so I'm part of a mastermind group of commercial guys, and the group's been growing. I've been part of it for, I don't know, a decade. And there's a lot of new people that come in. And so one thing that I started to take on a few years ago was doing partnerships. And I realized hey, there's a lot of guys out there that, they know they can go out there and find a good deal, right? But they don't know what to do after they have that good deal. A lot of times, actually, they'll find a good deal, but they'll be too scared to put it under contract or, even how to go through that process. And so I realized, well, there's a big opportunity here for both sides, right? We know how to put a deal together. We have the infrastructure of the company, and we love more deal flow, of course, and we like to burn and turn deals. We on average do about 7 a year, and we'd like to ramp up those numbers. And so, anyways, we started doing a lot of deals with folks that are just getting into it, that came out of either residential or multifamily, or just in general, came out of a business and want to get into real estate, and they heard about commercial. And so we've been very successful in doing a lot of JVs. And we can structure it in a multitude of different ways. If they want to be the boots on the ground and go through the whole thing, and we're really just there to kind of be, a guiding light, we can do that. Or if we need to do the whole gambit, take over, you just found the deal, and hey, you either need quick cash or hey, you're looking at it as a long-term equity investment, then we're open to that too. So like it's been great because we're getting deal flow from it. And we're also meeting, new partners that we can do multiple deals with, which has been great. And then guys that are looking to get into it, it's just awesome to see when, they get that excitement that I first had when I did my first deal.
Yeah, no, that is a win-win way to do it. That's smart. Very, very smart, Danny. So, uh, how are these guys typically finding these deals? Are they off market or are they bugging brokers for stuff? How are they typically finding these kind of deals?
I think in today's, well, actually, it doesn't matter when, but you need to have lots of irons in the fire.
Mhm.
Going to brokers and creating those relationships are key. Looking on market properties. I mean, there's so many stale listings out there these days. I
Mhm.
mean, stuff has been sitting out there for 6, 12 months. These sellers are getting, antsy to get something done. I mean, that's when there's some motivation there. So if you can get the right terms in place, you can make a great deal that's been sitting out there for the last 6 months for everyone else to see. And then we also love, love, love off market deals. So
Mhm.
cold calling, like we drive around. What we try and do in our company is we drive around maybe once a week, every other week, and we'll find a new part of town wherever we're at, and we'll just drive and we'll jot down every property that, like, hey, this is a great road, great traffic. Why is this property beat up? Like, there's nobody in it, it's vacant, the parking lot's a mess, the roof's a mess. This is a great opportunity, value add opportunity. Like, let's figure out who the owner is and contact them. Right. So off market deals are great. And then relationships, right? So like I'm buying a grocery anchored shopping center in Northern California right now that is they were friends with my grandparents. They were the original developers, and I had no idea they were in commercial real estate until literally about a year or two ago. My grandparents were like, "Hey, our friends are in commercial real estate. You should call them and just see, that you never know." What do you know? We're under contract on a $16 million deal with them right now. And it was just by reaching out, creating that relationship, building that rapport, and working out a deal that made sense.
Well, I love what you're up to, Danny. I appreciate that, you came from multifamily. Sounds like you're doing pretty well with that. Then your ears perked up when you realized that your mentor was doing something completely different. He was investing with you, but his own personal investments were all in this triple net lease type thing with commercial and industrial. So you took a look at it, then you jumped in. And then what I really uh, admire as well is just how smart this is, partnering up with newer people in the field, not seeing them as competitors, but cooperating together and doing these joint ventures. It really does make sense because I mean, so many people, even if they got experience like you did in multifamily, this is a whole different kettle of fish. So jumping into this, working with somebody who knows what the heck they're doing, kind of learning the ropes, getting paid while you're on the job, so to speak, right? Whether that's equity or partnership or whatever that looks like, and then learning as you go so you can do this yourself later. Great. But in the meantime, it just makes sense to partner up. So, yeah. As we're wrapping this up, Danny, what are the big goals? Where do you see things going for the rest of the year?
It's a weird marketplace out there. I think everyone
Yeah.
sees it. It's been a little tough to find, really quality value add deals, but I think they're coming back. I think that with all the political instability, I don't think that anyone thinks that interest rates are coming down anytime soon, at least in a big way. So I think this is the new reality, and sellers are finally getting a little bit more motivated to make deals happen. So we are ramping up our acquisitions. We are really highly focused on the Southwest and Rocky Mountain region, and going after retail and industrial. So, that's our main goal. We'd like to do a deal a month. That's really where we'd like to be. And we're just working towards that.
Oh, that's awesome. One last question, I guess, because you're ramping things up so much. When it comes to financing these, when it comes to raising capital for these kind of projects, do you do everything in-house with your own capital? Do you raise capital? Do you syndicate? What do you do to raise the money for these
We,
deals?
Yeah, absolutely. We do a little of everything. So for the smaller, I'd call it like less than 4 million, 5 million. We try and keep it in house.
Mhm.
And we do try and do a lot of creative terms too with sellers. A lot of times we can work out pref equity, a second, or really good seller financing terms with the first. So we're trying to get in light as much as possible, and not bring in third-party partners, just because that's a whole nother business in itself, is syndication. So we do it. We typically do it on the larger assets. And when you're doing a large capital raise, right? So not to say we don't, but I would say probably 80% of the deals we do are just in-house.
Yeah, makes sense. Awesome. Danny, if people want to find out more and connect with you, where should they go?
Absolutely. VailCommercialGroup.com. Reach out to me, John, Gary, anybody on the website. Let them know, hey, how can we work together? We'd love to do something.
Sounds good. Well, thanks for sharing your story and what you guys are up to. It's exciting stuff.
Thank you, Dave. I appreciate it.
All right, everybody, take care, and we'll see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.